and good evening. Get the TikTok stream up and running. Fix the YouTube stream and then where we'll be going. There we go. Come in. I'm looking at them playing outside, so nice. Hey Shandal, you were quick. A good day so far. Let's see what, if anything, happens at the close. Oh, is it me or is there a double bottom on AMC? Looks like very much like it. Not just a double bottom, but a double on bottom on yesterday's closing price. What have we got here? This is on the 5 minute. So we're looking at the high of 12.16. That's where we've got to be, 12.16. Good for you. Good for you. I need a top up. Might as well see you at the close. Hydrated. So, yeah, today's been a good day with the exception of Joby. Red box, we went over 3,000 red on at one stage. No, is it 3 or 5? 5,000 red, I think. And we slowly but steadily clawed our way back. So, if I just zoom out, you'll see all the trades that I took with red box. So even before that, that was a nice little. So I was watching it. So I got in here, moved up. I was watching this on the 5 minute, and I saw this drop. And because I had it open on the trade window, such a violent drop is usually met with a quick spring back up. It's like an elastic band. So I just quick bought in there and took some profit when it started to pull back again, when it started to drop again. I kind of took some more profits and then exited the position when it broke lows. The first candle to break a low was here, so I exited the position. And that was a really good trade because I went in big size with such a violent drop is always met with a a buyback. But yeah, this downwards here, I bought in for this candle to make a new high here. Got some profits there. As it moved up, once it came back, started coming back down, I exited that position. So red box, it took a while, but I got green on the day. I think this was the trade that took me green just after 1:30 market time. So moving up, first real pullback on this. So we got the bottom bounce, if you will. First pullback, I got in, moved up, and took profits at the top end there. So red box, been happy with it. Even though I'm only $25, it's because of where I've come from with it. So GME was the big one. GME short. So I went GME long. I went 3,000 up, I think, almost 3,000 up, just shy of 3,000, and then gave it all back. And just the way it was, that was all on stream anyway. But just the way that GME was, I saw should have been 6,000 up on GME in total, long and short. So I saw this. We were trading it up, and then at the top end we got on the 5 minute we got a nice little top and tail doji, clear indicator of reversal. On the 2 minute it was the devil horns, which is a clear indicator of reversal. And what did I do? First candle to make a new high, I bought in long instead of waiting for the confirmation, and I gave back the majority of the 3,000. I ended up with $70 green on it instead of 2.5, 3,000 green on that long. And that's when we got a little bit of a flat bottom here. So I entered short and for the break of the flat bottom, and it flushed down, and that's where we made our 2,500 on GME. So yeah, it's been an eventful day with this. I went and took the dog for a walk, came back, had some dinner, traded red box a little bit more, traded APYX, and that was easy enough to trade. One trade. Where did I get in with APYX? Oh yeah, the first trade I took was for the break of the VWAP, and I didn't take profits quick enough. It didn't actually quite meet my target, so I got out when it broke new lows. Then when it started to make new highs, we got the bottom bounce here, so it started to make new highs. I got in here, moved on the way up, took some profits, added back, took some more profits on the way back down, and then moved up again. And I think yeah, that was pretty much it. We exited the position here, so we added for the bounce on the VWAP there and exited the position down here. So yeah, we've had some success today. It's not the 10, 15, 20k days that we've got used to over the last year, over the last 6 months, but you know, the third green day in a row after going 7k red on Monday, which again was I'll put that down as a small win considering we're 16k in the red on Monday at one stage. We brought it back down to finish 7k red, and we're now, after today, we'll be green on the week, so the second green week. Hey London. So yeah, we're making small progress. I'm kind of resigned to the fact because we're not getting those parabolic movers that I've got used to, where you can make 10, 15k with quite easily, if you will. I've got some profits to take out at the moment, so I've got some profits to take out at the end of the month. I might leave 25 in the account, gives me a little bit more to take out. So I didn't take any profits last month. Well, I did, but I had to put them back in because of the first day of this month. We pretty much almost very close to blowing up the account. But there you go. That's just me waffling. The essential package, Reach. It's the essential package. So check the link in the bio. If you want, I can get you a discount. I've got a discount code. Just take the 2-week trial, and then when it's, because you get the full package on the 2-week trial anyway, and when it's coming up, let me know and I'll give you the discount code. I'll give you the best discount code. I've got a couple of different discount codes. I've got one for, if you take the annual package, there's 66% off. Or if you're taking the monthly package, a quarterly or annual package, it's 66% off. If it's the monthly package, it's 50% off. So yeah, no problem with that. Just let me know and I'll tell you what it is. So just check the link in the link tree. I'm not sure if it's in there. I probably should I should update it. But the Benzinga's great. I'm enjoying this new scanner. I hadn't used the new scanner. Tried it when it first came out. It's in beta mode at the moment. I tried it when it first came out, and then I hadn't used it for a couple of months. And then one of the people on the course, one of the students on the course, asked me what my opinion of the beta scanner was. I'm like, well, it wasn't great when I tried it the first time around, but I'll give it another try, and I'm really enjoying it now. It's really good. I'm still using the old scanners because just for the stream it's beneficial, but the new scanner is really good. Come away from the tripod, because you'll just knock it over, you clumsy ass plus bag. Come round. Round. Good girl. Which bio is it? My bio. Just go in, if you click on, what I'll do here is I'll do you a favour here right now. I'll show you, whilst it's not busy, I'll show you exactly where to find it. Okay? So this is my TikTok account. This is what I watch my chat on, but this is my TikTok account. If you go into my profile, it brings you up to here. Here's my profile. You can double click on my face and it brings you up my profile. There's a little link here that says the TikTok Trader. If you go into the link, now if you're on YouTube and you're watching this on YouTube and you haven't seen this already, check the description. These links are all in the description of all in the description. The first link is the course to learn how to trade, but the second link is what you're talking about, is Benzinga scanners. If you click on that link, you'll get it free 14 days. Once you click that link, I will give you a code. Once you, I tell you what, let me know when you've clicked that link and you've signed up for 14 days. Come back, let me know, and I'll give you a code that you can use to sign up. That will give you either that 60% or 50% if you're going for the monthly option. Hope that makes sense, London. Right now, the code, the latest code, just look for the latest one. Because they've got a Memorial Day weekend promotion going at the moment. So, Benzinga. MEM22. So check. Let me know if that works for you, London. And the code to sign up. Once you've signed up, if you want to get that now, it's MEM22. But that's only going to be for this weekend because it's Memorial Weekend promotion. So if you want to sign up now, use that code. If if you want to take the 2 weeks, the 2 week trial, the free trial for a couple of weeks, that's fine. Do that. Then come back to me at the end of that. I'll get you the best discount. It might not be the 66%, but I'll get the best discount. Usually I can get at least 35%, depending on what time of year it is. So let me know what when you sign up, when you're ready to sign up, and I'll get you a discount code. But I would go for the essential, unless you're interested in options, London. They do an options mentorship package, but I'm not an active options trader. I know how to trade options, so I'm not an active options trader. Intraday, I am an equities trader, stock trader. So I'm a breakout trader is what I am. So I don't need the options. The cheap package, it's only, you know, it doesn't give you the functionality that you want, but the essential package you get all of the scanners, signals, the movers, the news feed, the IPO and earnings calendars, the trade ideas, insider news. All of that comes with the essentials package. Now the standard price I think is $177 a month. It's about $1,200 a year or something like that, but with the discount codes that I can get, it's a lot cheaper. That's the standard price. So just let me know when you're ready to sign up for it, and I'll get you a discount code. So I'm now looking at the biggest movers over the last hour. As we're coming into power hour, it's 5 to 8 or 5 to 3 market time. I'm just looking at the big movers. Nicola. Trade desk. Let's have a look at trade desk. Decent volume. Decent relative volume. 1.5. .465 if both been on. 300 flow. Bit of a high flow. I guess I've traded this before. Don't remember trading this before, but I've definitely traded it before. I've got a support resistance line there. Let's have a look at it on the 60. I've got multiple support resistance lines. I've definitely traded this before. So I've traded this a few times in the past. By the looks of it. Must have been last year. I don't recall trading it this year, that's for sure. Let me just have a look. At the filters, symbol, TTD. When did I trade it? I've made 800 bucks on this symbol in total. Over 2 days. Averaging 400 a day. So that would have been, I made 400 on it in June last year, the end of June last year, and I made 400, another 400 in November. That's the, you know what, that's the beauty of TraderView. You think you know a stock, you think, okay, I traded this before. You just go to TraderView, put the symbol in, it says, okay, this is the last time you've traded it. This is how you made money with it. this is the volume that you traded on each day. Wins versus losses. You can get all the details. Average daily gain, 425 bucks. So yeah, I guess that's the advantage of logging and having a platform to log and review all your trades. So don't forget to do that, kids. Why have I got more people in the stream than I've got likes? That's a bit rude. And I hope you've hit the thumbs up button there, Shando. I know you've subscribed and you've hit the bell and everything, but I hope you've hit the thumbs up button as well. Power hour. 3 minutes to power hour. Sega seems to be the top mover at the moment. We're a top mover over the last hour. Decent volume too. High of day currently is 10.20. Oh, we're breaking highs. Breaking highs. Again, this had a phenomenal run up after hours on would it have been Friday, methinks. Cheers to a green day, guys. Like I say, it's not the 15, 20k green days that I got used to over the last year, but green's green. Thanks, Trini. And everybody in the stream, just tap the screen 10 times. It just helps with the algorithm. It'll push it out to more people. It'll get more people into the chat. Just tap the screen 10 times. It'll get us over 100 likes, and then that way it'll say that, oh, there's engagement on that stream. Let's push it out to more people. They might enjoy it. Thanks a lot, Kangaroos, and you too, Trini. Appreciate that. I'm not promising I'm going to take a trade in power hour. I've got to a point where, look, 3,600 is a good day's trading. It was similar yesterday, and I don't want to be giving profits back to the market at this stage, so I'll wait for a quality setup. If I don't get one, I don't get one. Black Sky, it's making a move upwards. Yeah, broke the VWAP. I thought we were done with this today. Very sideways. Look at it on 60 minutes. Very choppy, this sideways. So it made this huge run up yesterday on the announcement of this $1 billion contract with one with the US government. Had a sell-off at the close, people taking profits, and then it's just been choppy sideways ever since. So 262 is still the line in the sand that I'd like to see it break, and then we can start saying it's bullish again. Up until it gets to 262, I'm kind of probably going to shy away from it. No problem. Look, it's hey Dublin, I've not seen you. I've not seen you in the chat for quite some time. Have you been locked up or something? That's not a problem, Trini. It's not exactly a secret. Simple. It does smack of that, but it's certainly on the longer time frame, Chiscarabin. No, in terms of the capital that I trade with, I try and start each month with 30,000 equity. So the way that I do this, so for example, okay, just put this into context. I normally start each month with 30,000 equity. The last time I didn't was February, and that was because I was doing a small account challenge. Now this is I've got two accounts for capital markets, and this is the account that I started the small account challenge with in February, and it was just under $5,000. I started with in February. I finished February. There was 19 trading days in February. It was a short month. Finished February, and we had $79,000, so over $74,000 worth of profit. What I actually did with that is I took 40,000 out, and I left it with 30,000. And then the following month, I made over 80,000 in profit. The following month was March. I had another good month. April, I made 31,000 in profit in April. It wasn't such a good month, but I withdrew 35 to leave me with 30,000 on the account for May. I lost 28,000 on the 1st of May. Well, actually, it wasn't the first. It was the first trading day of May. It was the 2nd of May. I lost 28,000. So because the transaction hadn't actually gone through for me withdrawing, I reinstated the 35,000 profit from April that I had withdrawn. I cancelled the withdrawal. So that meant that 35,000 went back onto the account, and I've been trading with that since. Right now, I'm still in the hole for a little over 20,000. I'll tell you exactly what I am on trade profit and loss for the month, May the 1st to now. So according to trade profit before today, trade profit and loss, so this is before commissions, charges, and transaction fees, etc. I was 13,000 in the red before today. But if I look at my actual numbers, my net numbers before today was 24,000 in the red. So it's an additional 10,000 in charges and fees and everything else. So that's where I am at the moment. So the answer to your original question is I like to trade with a $30,000 account plus. What I do is I don't withdraw any money until I get to the end of the month, and then I look at where I am on the end of the month, how much profit I've made. I don't say how much loss I've made, because the last time I had a red month was January of last year, 2021. This is possibly going to be the first month I've had a red month since then, market conditions and all. So that's what I would say, Trini, is I try and keep a $30,000 account. Now, people say, what's the minimum? Because $30,000 is a lot of money to have tied up in a brokerage account. So people say, what's the minimum I would say is worth trading with? I would say the minimum is 5,000. You could trade with less. 2,500 to 3,000 is the absolute bare minimum, but I would recommend at least 5,000 as an equity start. But have realistic expectations. You're not going to make $1,000 a day on a $5,000 account. It's just not going to happen. So don't have that expectation. Dublin chat, has anybody given a go at replicating your trades? I wouldn't know, because every single day, as you probably recall from the last time you was here, I tell everybody, don't follow me blindly, do your own due diligence and your own research. I am not offering stock picks, signals, or alerts. What you see in the stream is, at least on the TikTok stream, I believe it's about 3 to 5 seconds delayed. It's about 30 seconds delayed on YouTube and Twitch, unfortunately. So don't follow me blindly. I would much rather teach you how to find your own stocks to trade and teach you the strategies on how to trade them and how to recognize the entry and exit points, so you don't have to follow me or anyone else blindly. If you start trying to follow people blindly, you're going to get burned. You might work and get profitable, but more often than not, you'll get burned. So just be careful, and I deliberately say that as well. And people that take my course, people who study my course, I say right up front, look, it's no guarantee that you're going to be profitable. That's down to you. I can give you the knowledge. I can teach you how to read charts. I can teach you how to, recognize support, resistance. I can teach you how to recognize windows of opportunity. I can teach you how to recognize the patterns and look for the breakouts. I can do all of that. The technical aspects, technical analysis, I can give you the strategies. I can do all of that. What I can't give you, I can give you some pointers, but the discipline, the psychological element, that's down to you. As an individual, that's down to you. Yeah, you see more on my YouTube channel. If you go again into my link tree, my YouTube's all linked in my link tree. It's actually linked in my bio. You click the Instagram link, it's got Instagram or YouTube. I'm streaming live on YouTube and Twitch and Twitter and TikTok at the same time. You see more on my YouTube channel than you will on TikTok, just purely because TikTok's optimized for a mobile phone, whereas YouTube is optimized for a PC or tablet. What's the benefit of a leveraged trading account? Compounding. Quite simply. So think about it this way: if you've got a leveraged trading, if you're trading in a cash account, and let's say you've got a $5,000 cash account, which I'm saying is the minimum, realistic minimum you should have for day trading. And then it's going to be difficult. You're not going to be able to make a living on a $5,000 account. You make a bit of pocket money. You're going to have realistic expectations to make money. So if you've got a $5,000 account and you're looking to make $100 a day, yeah, possibly you could. $250 a day maximum, whatever. You're not going to make a healthy living trading a $5,000 account. The difference between having trading $5,000 cash account and trading a $5,000 leveraged margin account is buying power. So for example, at the start of the month, you have a $5,000, one person, Johnny has a $5,000 cash account, Tony has a $5,000 leveraged margin account. That day one, Johnny can buy up to $5,000 worth of stock. Tony can buy, depending on leverage, between $20,000 and $30,000 worth of stock. So if you both get on the same stock and you take maximum share size and you ride it up for, let's say, 5%, of course, you're going to make a lot more money with the leveraged account than you do with the cash account. Of course, likewise, you can lose a lot more money if you don't manage your risk. So that's something that you've got to put into context. You can, and the compounding effect of that is also evident. What I mean by that is, let's say day one, you make 10% gain. I mean, we're being ambitious now, but let's say we make 10% gains. Johnny with his cash account makes 10% gains, so he makes $500. He makes $500 on day one. On day one, also Tony with his leveraged account only makes 10% gains, so he also makes $500. So they both got $5,500 on day two, whereas previously Johnny had $5,000 to trade. He's now got a buying power of $5,500. Tony had 5,000 to trade. He had a buying power. If like I would have a buying power, I've got 6 times leveraged capital markets. I would have a buying power of 30,000. Now I've got a buying power of 33,000. So that's the compounding effect as well. So I've got an additional $3,000 worth of buying power, which is almost just by that 10% that 10% gain. It's giving me almost as much again on my account as what my equity holds. So I've got 3,000 additional buying power just from that initial 10% gain. So that's the advantage of trading in a leveraged margin account. It's you can grow your, once you get to, the economies of scale don't work. They actually work against you, the larger the account you've got. So if you've got a 6-figure account, you don't need leverage. You can trade a 6-figure account quite comfortably. If you've got $100,000 in your account, it's okay to trade that as a cash account. If you've got $100,000 in your account and you're trading low float stocks, low cap stocks like I am, you're not going to need 600,000 or 400, $500,000 of buying power. It's very rare that you're going to use $500,000 worth of buying power. So maybe you'll lose 250, but you're not going to, realistically, you're not going to try and trade with $1 million of buying power. Not with low float stocks, because what you end up doing is you're going to be buying so much of the float. You could end up being hit. You're having to have paperwork to file because you've got 5 or 10% of the float or whatever it is. You end up having to fill out forms, and it just gets a bit messy. But also on top of that, you get on top of that you get I've completely lost my train of thought. Forms. So yeah, on top of that, the issue of percentage gains becomes more difficult. As you're removing liquidity from the market, you'll end up getting charged ECM fees and things, so you remove more liquidity from the market, which means that there's less room for the market to maneuver, and you end up preventing hi Irish Maria back up. I'm not going live with you, that's not the type of stream this is. But then you end up reaching a plateau. You get to a certain level, you reach a plateau in terms of how much you can make on a daily basis. I know some people that trade low float stocks, they're making, on average, they're making $20,000, $25,000 a day. Really good trader doing that. Over the last 18 months, I've averaged about $5,000 a day. But that being said, and I was averaging $5,000 a day up until probably mid-April. But this month has completely wrote that off. The better thing to do is take your gains and put them into lower risk investment strategies. Are the commissions charged on a leveraged margin account any better than a cash account? There's absolutely zero difference. You'll end up getting more commissions and charges because you end up taking bigger size. That's the only difference. But the percentages, it depends on your broker actually. So in terms of ECN fees and things like that, where you're actually charged per share, then you will get higher charges. But if your broker is one that charges per transaction or per round trip, then it doesn't matter about your share size. If they charge per share, a percentage per share, or a fee per share, flat fee per share, then the more shares you take, and if you've got a bigger account, you inevitably will take bigger share size, so your commissions charge will be higher. So it really depends on your broker. If your broker, for example, Capital Markets is charging me per transaction, not per share on commissions. Still getting hit by commissions on ECN fees, which in some days are often more than the commissions. I think Interactive is charging, Interactive brokers who I also use, I don't tend to trade with them as often on a, oh my goodness, eyes just popped up. Traded that lots of times. Low margin, low volume, but I've traded this a few times and it's moved up quite heavily on some days. He usually trades in sympathy with it. So yeah, so essentially it depends on your broker. If I was trading Interactive Brokers, they would charge me commissions per share, whereas Capital Markets is charging me a round trip. So you know, it swings and roundabouts, I guess. If you're trading smaller size, the commissions per share tends to work out better. If you're trading higher size, you know, larger share size, then obviously round trip's better. No problem at all, TM. I'm not trading options or CFDs. I'm trading equities. That's what I'm trading here. Stocks. I've not been trading. I don't tend to trade indexes because they're a derivative. CFDs I don't trade because it's not the actual. Whoever you're trading a CFD with, you're not getting market price. You never get market price with a CFD. There's always an added spread with it as well. And options is better for me. I know people that trade options intraday, but I tend to leave options for swing trading. That's just my strategy. So we've been long and short with GME. We're green on both. We went long with APYX. We got 1100 on that earlier. We went long on Joby Aviation. We lost 120 bucks on that. Redbox has been the big one, the most active for me. We lost 5,000 to start off with. We've clawed all that back. So we're now green on that particular ticker, and we're green on the day. To be fair, I have wrapped up a few commissions. Nearly $700 worth of commissions and charges, but still. I've had mixed reports with 212. I've had some bad reports. In terms of technical indicators, it's missing some. B, it only carries a subset of the instruments of the order book. That's what I've heard. Correct me if I'm wrong. I've never traded with 212. Whenever I've tried to apply to 212 back in the day, there was always a waiting list. So the fact that they allow trading CFDs instead of actually the instrument itself means that they're trying to make more money for themselves. That is usually a dead giveaway if they're trading CFDs. Now, you can get to a spread betting account, which is essentially they do CFDs as well. And that's how CFDs are looked at in the UK in terms of tax purposes. If you're trading CFDs, you're not party to capital gains tax. Not necessarily. When I'm looking for a reversal, because it might come back to a support level and then get the reverse. It doesn't have to break support, because if it's a strong support, it might not break support. You look for the reversals. So if it's selling off, you look for the indicators, the doji indicators for one. If you're looking at the end of day, particularly for a top reversal or a bottom bounce, maybe look at the RSI and find out how extended is it? Is it oversold or overbought, depending on whether you're going long or short? Also, Bollinger Bands are good for reversals. If you're getting the doji, when you get the doji indicator, if it's completely outside of the Bollinger Bands, it's usually a good indicator it's ready for a reversal. So there's a number of different what I would call entry indicators for a reversal, or exit indicators for a reversal if you're in a position. Okay, I'll enjoy the trial, and let me know as it's coming up to expiring. I'll get you the best discount available at that stage. There's a good one available at the moment for the Memorial Day weekend, but we've got another, I think, July the 4th. That's too far out because your trial's 14 days. So Well, I'm glad to hear that they're actually adding more to their order book. But again, this is one of the reasons I like to trade with the likes of interactive brokers or capital markets or a similar broker that allows you to use a direct access software. Because what you get with the direct access software is you get the full order book. So I get the total view, the NASDAQ total view. So I've got the full order book for NYSE and NASDAQ. And essentially, I'm then just going through, I'm going direct, but it's being facilitated by my broker. So if 212 allowed me to trade with Dash Trader, then I might actually consider signing up with them. But right now, if they're not, then probably not. If you're having success with them, I mean, you tell me. Hey Matt, welcome back. You tell me, no name. I mean, like I say, 212, I've only heard reports from them. So you tell me, are you finding them good to work with? What platform are they allowing you to trade on? Is it proprietary, or do they have others? I don't know. I don't know firsthand about 212. So I'm trying to gather as much information about the brokers that are available to the European audience. There's so many available to the US and Canada as well, but outside of that, we're kind of limited on this side of the pond as to who we can trade with in terms of functionality, order book, access, platforms, etc. So you tell me, keep me informed. Let me know what your thoughts of 212 are. If you're enjoying the platform, if you like the platform, does it have hotkeys? Does it have hot buttons? What are you able to produce scripts, order scripts and things like that? I'm very interested to know, because that way, for the students of Trade with Tony, they ask about 212. I want to give them an impartial opinion about it to say, well, this is what I've heard and this is what I've not, I'll check that out. I won't forget that name. Alpaca Trading. Cheers, guys. Here's to good days and green days. How are you faring today, Matt? Have you been trading? Are you green? Are you red? Trade Zero. So Trade Zero is not too bad. From my experience, I've not traded with them, but I have looked at the platform, and it's kind of a decent platform. Well, there's two platforms. Trade Zero give the option of the you've got your desktop application, but they've also got a web platform that they provide as well. So Trade Zero and that platform is actually not too bad for day trading. I wouldn't say it's on a par with something like Sterling or Dash Trader or TC2000 or something like that, but I would say it's certainly on a par with something like Thinkorswim. And so from what I've seen in terms of platform, Trade Zero Pro is not a bad platform for day trading. I'll take a look at that no-name. I can never get enough information. Never get too much. Obviously, I can get enough. But I can never get too much information, and I like to be able to because whilst I always bearing any significant developments, I probably will always revert to type and go back to Dash Trader. It's kind of where I got. The reason I like Dash Trader so much is prior to Dash Trader, I was a consistently losing trader. I was losing money month over month. I'd have, green days. I'd have a streak of 4 or 5 green days in a row, and I would think, yeah, I've turned a corner, and then I'd lose money. Then I started using Dash Trader, and the hotkeys, the hot buttons, the configuration, the order scripts that you can put in there, the various stop orders, and all of it combined. Whilst the charting of where I don't like about DAS, it's not so much I don't like it. What I think there's better platforms than DAS, which is why I also have TradingView, is the charting is limited. They only give you a limited amount of data, so you can't look back and analyze for the last couple of years, for example, which is why TradingView is so great. And if you can link in with TradingView, fine. But DAS Trader, just from a trade execution point of view, I've been profitable pretty much since I started using it properly. I think I had about a month, well, about 4 or 5 weeks where I was up and down, and then I turned the corner and I've been profitable ever since. So I have a soft spot for DAS Trader. It is my go-to platform. I've since traded with Sterling Trader, which I think is great, very configurable, very user-friendly. Again, hotkeys, hot buttons, scripts, everything that you need. Charting is better than DAS Trader. The integrations, I think, are slightly better than DAS Trader, so you can get trade ideas and integration with I think they actually can integrate with Benzinga. Sterling Trader is great from that point of view. The downside to Sterling Trader is there's not a lot of brokers partner with them, so they need to, you know, book up their ideas and start partnering with a lot more. It's DAS, D-A-S, as in Direct Access Software. It's an acronym. It's Direct Access Software. And the monthly, it depends. So if you're subscribing through, it depends on your broker. So with Capital Markets Elite, it's free for me. DAS, only Direct Access Software. So and if you want to know, the link is in the link tree in my bio. Direct Access Software. You can go in there. You can get a simulator with that. You can get a lot of brokers will have an OEM version, which is what Capital Market, the one that you're looking at right now is Capital Markets version, but it's the same platform. It's just branded as Capital Markets Elite Group. Direct Access Software, absolutely, that's it, spot on. There's a link in the link tree in my bio, and you can get access to it there. If you're trading with interactive brokers, for example, you subscribe via the platform. However, with Capital Markets Elite Group, you subscribe to Capital Markets because it's all OEMs and they give you their own version of it. So if you subscribing via DAS directly, like you would be with interactive brokers, for example, then it's anywhere, depending on the data feed that you get, the order book that you subscribe into, it's anywhere between $100 and $150 a month. You can have a little bit. You can go for the full package where you get an options chain and everything else. But I prefer Interactive's own options chain to the one how it's represented on DAS Trader. So I never subscribe into that. So I just go for the Nasdaq Total View and NYSE order books. I don't subscribe to the OTC markets because I don't trade the OTC. I don't trade those, you know, low value stocks. So I don't subscribe to that. So that's what I subscribe into with. And do you know what? I'm not even using it. I'm paying on a monthly basis for access to that with Interactive. I'm not even using it because I'm using Capital Markets. Now with Capital Markets, what they do is they charge you. It's I think it's 125 bucks a month. 35 bucks is the data fee. 90 bucks is the platform fee. However, they reimburse the platform fee if your commissions reach a certain level within the month, which mine invariably, because I'm an active trader, mine invariably always do. So I always get the rebate. Effectively, I'm getting the platform rate. So it's costing me 35 bucks a month for the data charges, and I'm getting rebated for the platform charges. So that's. Hope that answers. Hope that's a. as you can tell, I've been drinking the red wine. That answers your question, London. Well, if you're going to trade, because I traded it today and I was about almost 3,000 up long, and then I gave it all back pretty much. And I'm kicking myself because I even called out. It was live on stream, and I called out, and I'll go back to it here, so you can see it here on the 1 minute. If I go back, so this would have been about 11 o'clock this morning, 10, 11 o'clock this morning. And then I went short and made the 2,500. Where would have been? Here we go. So here we started up here. We got this pullback. We entered for after the VWAP bounce. We entered and we got in. We rode it all the way up, and we got up here. And on the 5 minute, we got a. Was it this one? Yeah, it would have been this one. On the 5 minute, we've got a nice little doji candle. Is it this one or is it? Yes, something like that. Anyway, just trying to see where it was I traded it. I know it was. I traded it there. Traded it up there, and then when I decided to go short, it must have been here. Must have been here. So anyway, we traded it to the top. We got a doji candle at the top, and then it pulled back, and I spotted it. I called it out on the stream. I said, "There's your doji, a top and tail doji, a topping tail doji, clear sign of reversal." I said, "Look, it's reached its top end on the 5 minute." Let's have a look at it on the 5 minute. Might be able to see it. It was up there on the 5 minute, and zoom in. Definitely had a top and tail doji. I can't see it now. So go figure. We had a top and tail doji, and I said, look, it's actually because I'm looking at bloody Redbox, not GME. I couldn't find it. There we go. Right there, right in front of me. It's top and tail doji. This is what happens when you trade and drink, kids. Don't trade and drink. So we moved all the way up. We got about $2.5, almost $3,000 in profit. We took our last bit of out of our position here as it started to come back down. And I look at this, guys, on the 5 minute, because I've got multiple time frames open. I've got the 1 minute, the 5 minute, the 2 minute, 60 minute, and the daily, all open in front of me. And I'm looking for confirmation. Look at this, guys. The topping tail doji here is telling me next candle to break a low. It's a reversal. Next candle to break a low, we're getting out. So that's what we did. And then what did I do? Go back to the 1 minute and zoom in slightly. So we can actually see what I'm talking about. So not only on the 2 minute, I actually saw that. Okay, here we go. We're having fun here, aren't we? Don't drink and trade, kids. So this is what that same chart represented on the 2 minute. I'm saying not only did we have the topping tail doji on the 5 minute clear exit indicator, we've got the devil horns here on the 2 minute. Again, clear exit indicator. And I called this out. And what did I go and do? First candle to make a new high, I entered. It's kind of autopilot. And it reversed. So very quickly I thought, do you know what? I'm stupid for doing that. And I effectively lost $2.5 grand. We were over 2,500 up, about 2,700 up or something like that. And I gave it all back. We finished with $70 green. And I quickly changed tack. Then on the 1 minute, we got a lovely flat bottom formation here, so it was looking very bearish. So I entered short, and we shorted it, and then we were able to make gains on the short side. So technical analysis does work, providing you pay heed to it, guys. Anybody that says technical analysis doesn't work, doesn't know what they're talking about, and Yeah, you've got to pay heed to it though. If you don't, particularly when you're calling, it shows how stupid I am sometimes. You're actually calling out the reversal signals right there on screen in front of you, and you're like, yeah, there's a reversal there. There's your topping tail doji. There's your devil horns, 2 different time frames. The fact that there's 2 different time frames saying reversal on different patterns, clear confirmation that there's a reversal about to happen, and you go long. Where's the logic? Would I recommend interactive brokers? Absolutely, I do recommend interactive brokers. There's you can if you click the I've got a link in my link tree where you can get some free stock. If you sign up via that link, you can get some free stock, up to $1,000 worth of free stock as well. Of course, I'll get some free stock if you do sign up for that link and end up depositing money. But yeah, I do recommend interactive brokers. I'm not a big fan of the Trader Workstation, which is the interactive broker's own proprietary platform, which they will push on you. They will give you that as part of the setup. You do have to pay fees, data fees for live data. That's a given. The commissions are not too bad. Tweezer top, devil horns, you call it, potato, and all that kind of stuff. But the commissions, I don't find the commissions too bad. About $3. It works out about $3 a transaction. I think that when I signed up, it was per transaction. It's now per share, but it's actually quite reasonable. The commissions wise. Technical analysis. I can even talk if I've not been drinking, But technical analysis works without red wine. Absolutely. I wasn't drinking when I called out the what else did I call out earlier? Redbox inverse head and shoulders. That was a lovely one that recovered a lot of the loss that they initially sustained. Red wine means more risk. Absolutely, 100%. So let's go back to the 5 minute on Redbox and scroll back. So I managed to trade that as well earlier. There we go. That's what I saw. Now, I called this out, and this is on the 1 minute. So I called this out, and I was actually looking at on the 5 minute, because on the 5 minute it's a bit more obvious. And I'll show you the 5 minute in a second. So I lost money on this one at the open, Redbox, and we ended up going I think about $5,000 in the red. And then we got, what I saw here was a head and shoulders pattern. So there's your first shoulder, there's your head, and there's your second shoulder. A little bit extended. It's a bit messy because it's on the 1 minute chart, but also looking at it on the 5 minute chart. And I'll show you on the 5 minute chart. It's a little bit clearer. So we're getting the inverse head and shoulders, which typically break upwards. So I look for, okay, we'll come back down, test the VWAP as support, still thinking about the inverse head and shoulders pattern. First candle to make a new high here, off the bounce on the VWAP. I'm entering long. And we got this huge move up, and it was a lovely move up. We actually added to our position on the way. We took some profit, added back, and then took some profit up at the top end. So that was a really good trade, but it was purely being able to spot the wider pattern. And this is what I'm talking about pattern breakouts. Now, if I go to the 5 minute and zoom in, because that just looks like a bunch of lines, and show you it on the 5 minute, you can see the head and shoulders a little bit clearer. So you can here, there's the shoulder, there's your head, there's the other shoulder before the breakout. So the fact that I'm looking at it on multiple time frames gives me the confirmation. If I spot it on one time frame, am I seeing another pattern, or am I seeing the same pattern on a higher time frame or another time frame? So we've got the confirmation. It just gives credence to the fact that you're going to get a pattern breakout. And this one was a really great trade, being able to add to the position on the way up and And then when it started to come back down, getting out for a total profit. So that was lovely as well. So yeah, we're having a good day today, and I've decided to celebrate, and that's why I'm not trading right now. I've not even been paying that much attention to the markets. I've been talking through the trades so far, and talking through brokers and charting and platforms, etc. And I hope that that you're enjoying the stream anyway, regardless of me not trading. Merlot, Malbec, or Shiraz, what's my favorite? So those are what I would class as house wines. I'm actually drinking a Ripasso. So this is Valpolicella Ripasso. It's an Italian wine. It's one of my favorite wines at the moment. It's I'm going through a phase where I'm enjoying my Italian wines at the moment. So I like. I used to like a good Chianti. I still like a good Chianti, but I've been experimenting more with some better red wines, and I came across a lovely Valpolicella Ripasso, and it just reminds me. I remember the name because it reminds me of raspberries, and you get a good one. You actually get the aroma of raspberries on it as well. So that's what I'm drinking at the moment. It depends, Chisker, a bit. So it depends what strategy that you're employing. So the gap and go strategy, what I'm looking for is ideally I want something gapping up at the open, and it can be pulling down, it can be pulling back, it can be pulling back towards the VWAP or whatever. But I'm looking at pre-market areas of significant areas of resistance or pre-market highs. So as we get the volume push at the open, if it breaks a significant resistance level or it breaks that pre-market high, that's the entry. That's what I would consider the trend for the gap and go strategy. So I'm looking for, and the reverse is the same. If you're shorting, you look for the pre-market lows or the pre-market support. If it didn't gap up or down and it's flat, then it won't be on my scanners, and then I'll be looking for momentum. So that's my second strategy is momentum trading. So I'll look for over the last 15 minutes, last 5 minutes, whatever, what's moving up with volume and why. So I don't just jump in something because it's moving. I want to see it moving with volume or good relative volume. But I'll also check on the scanners. I'll check Benzinga very quickly to find out, is there a catalyst that it's moving, or is it just purely, transaction volume? If it's got no catalyst, I will hold back just to see if it then forms a trend that I can jump in. And if there is a catalyst, then why wait? Why not jump on the back of the momentum with it? So you've got the volume, you've got the catalyst, and therefore the volatility. You look for the patterns. What you don't just do is jump in at the high and hope it goes higher. You wait for it to move up, you wait for a quick consolidation pullback, and then you get in for the next break of high. So for example, if you're looking at the 1 minute chart, you can do it on any time frame. If the 1 minute, what I would advise any new trader is, if you find, particularly at the open, if you find the 1 minute time frame is too volatile, it's too choppy, it's very difficult, you get faked out, you don't know how to manage your risk with the 1 minute chart, move to a higher time frame, 2 minute chart, 3 minute chart, 5 minute chart. Look for a higher time frame first. It becomes a little less choppy, a little less volatile, and a little bit easy. Granted, the range might not be as big, and you might not capture all the move, but the breakouts will be a little bit more reliable. And the pattern setups will be a little bit easier to spot. So maybe move to a 2 or a 3 minute time frame with confirmation on the 5 or 10. I have the 2 minute time frame, next to the 1 minute, and I'll have the 1 minute time frame, and then I have the 2 minute and 5 minute either side of it. Underneath I have the 60 minute and the daily. Now on the 60, I'm not trading the 60-minute or the daily. What I'm looking for on the 60-minute and the daily is areas of key support and resistance. So if the price action is moving up into one of those areas of, for example, if I'm going long and it's moving up into an area of key resistance, whether that is a previously confirmed resistance level or whether it's a psychological resistance like a whole dollar level, but rather than jumping in for the break of high, so if we've got a pre-market high of, let's say, 390 on a particular stock, 392 is the pre-market high, I won't enter at 393 for the break of after the bell goes. I'll wait for the break of $4 because you've got that psychological whole dollar level that it potentially could get rejected at. Even though it's broke the pre-market highs and it's looking bullish, it's still got that psychological level. So what I would like to do is either get the break of that, depending on the momentum. If we're getting good volume to break that that resistance level, I'll jump in for the break of that resistance level. If the volume's not so high, I might wait for the break of the resistance level. I'll pull back, test it as support, and then the next move up. And enter on the next high on the move up. Then I don't trade it. If something gaps up and then starts consolidating at the open and it breaks lows, I don't trade it. I wait for it to decide what. Sometimes it might be worth just sitting, but if you're unsure at the open, sit back and wait 5 minutes. Don't trade the first 5 minutes. The most volatile time of the market is the first 5 minutes. And another strategy that you can employ is the opening range breakout, high or low. So you wait for the opening range to form. So the first 5 minutes, your first 5 minute candle, you look at the high of the first 5 minute candle, you look at the low of the first 5 minute candle. The next candle to break either the high or the low is then confirming a trend either up or down. So that's what you're getting on that open, and it's a known strategy for day traders is the opening range breakout. So you can either short it if it breaks the low, or you can go long if it breaks the high of that opening 5 minute candle. And if you wait 3 minutes, whatever. But you wait for that opening range to form, and then you get in at the break of that particular level. That strategy is known as the opening range breakout, and there's a lot of traders will trade the opening range breakout. But again, a key important factor is it must have high relative volume, and I say relative volume, must have high relative volume. So if it's trading 10 million shares, but it normally trades 20, that's not high relative volume. If it's trading 10 million shares, but it normally trades 3 million, then that's high relative volume. Ideally, particularly in a market like we're in at the moment, the choppy bear market, the sideways market, where it's difficult to get the follow through, I would recommend looking for something at least 3x relative volume. I'm as guilty as everybody else when I'm jumping on, and I'm trading just for trading's sake now, and taking trades because they're moving, even though they're not on that high relative volume, because I'm thinking, well, it's got good volume and there's not a lot else moving, and that's the wrong mentality, and I am the worst for that myself. This goes back to the psychological element and the discipline required to be profitable as a day trader, and for me, that is one of the key areas that I've failed at this month, and why I'm not profitable in May is because my discipline in waiting for the right setup, the right stock. And how many times, for people that have been following my streams, you can probably tell me right now, how many times have I been faked out at the open this month, only to go red and have to spend the rest of the day trading my way out of trading my way out of a red position. You know, that's common occurrence this month. Now, normally with the gap and go strategy, for example, which is my go-to strategy, normally you look for the break of those pre-market highs, which granted has not been as common. The first one or first two 1 minute candles, you break that pre-market high and you go on a parabolic run. Those parabolic movers, particularly right from the open, have not been as common as they have been previously. That's for sure. So I myself have been guilty of taking less than A+ setups. And that's discipline. It's something that as a beginner trader, all beginner traders struggle with that. Experienced traders struggle with that. Hey Matty, welcome back. Let's have a look at the wider markets. I'm here sitting looking at Redbox. Let's have a look at the SPY, how we're getting on with the SPY. Let's have a look on the 15-minute chart. That's a nice, pretty picture, isn't it? So we consolidated pretty much sideways pre-market, but we took off and we've never looked back. That's a lovely picture on this is the S&P 500. SPY is the spider ETF, represents the S&P 500. Let's have a look at the Nasdaq. That's having even better days, 3% up on the day. So again, similar scenario, consolidation pre-market, and then we took off pretty much right out of the gate. So the markets as a whole, the Russell Index, which is the small cap, it's an iShares ETF. It's the small cap index, low float stocks and things which is probably more relevant to what I trade on a daily. Again, this is moving upwards, so it's a very bullish day. And lo and behold, I'm green on a bullish day. Yeah, surprise, surprise. This audience changes every single. That's the beauty of TikTok, Dublin. TikTok pushes it out randomly, and depending on how it's received, they'll push it. If you want to see this, or if you want to get notified when I'm going live, you basically just hit the follow button or subscribe button if you're on YouTube or Twitch. But hit the follow button on TikTok, and I'll be in your For You page when you and you get notified when I'm actually live. So when you go check out your TikTok, and of course I don't know what it is. Somebody check out who's got more than 1,000 followers. Check out your live. Just check out your profile if you have the ability to schedule going live, because I've lost my ability to schedule my lives for some strange reason. I don't know why. It's I shouldn't have lost it. I can still go live. I just lost the ability to. Well, I got a lot of regulars, Dublin. Don't get me wrong. I get the regulars. But I get, there you go, Les is a regular for a few months now, and you know, we've got quite a few regulars. Although, where's Snooze? I've not blocked Snooze on purpose, because he was a great source of entertainment. Complete moron, but a great source of entertainment. A guy that looked like Liam Gallagher's fat brother, pretending to be a retail investor or whatever, and coming on telling me I'm doing it wrong. I'm like, yeah, okay, if you say so. I appreciate that, Les. I wouldn't say the best, top 3, but I'm not the best. Maybe top 3. Yeah, there you go. Are you off there, Matt? I'll see you in the morning, well, afternoon, wherever you sat. I'll see you at 8 o'clock market time, which is 1 o'clock my time tomorrow. Last trading day of the week. I'm already green on the week. It's the second. Was I green on the week before that? Let me just check. I just want to make sure. I want to look at the net numbers. So yes, the first week I definitely wasn't green. That's for sure. So that first week I lost. Oh Christ! I look back now and that's just shocking. That first week of the month I lost $43,000. That's scary. Second week of the month I made $1,800 that week. Last week I made $18,000 last week. Wow, I didn't think I'd made that much. Yeah, I had a good day on Friday. $10,000 on Friday. This week, so far, I'm $3,000 good. I'm $3,000 green on the week so far, net. So that first week has dug over 40,000 drawdown that first week has basically meant that we're playing catch up, and I don't think we're going to have enough time. April we did a similar sort of thing, but we didn't draw down by that much, so we were able to claw it back. And then the last week we were trading for profit. I'm still in the red at the moment. Well, look, you can be on any time depending on whatever you want to trade at. You know, just because you're in Kent doesn't mean that you're not on American time. It's up to you what time zone you want to play to. You know. But yeah, I'll see you tomorrow at 1 then, or whenever you can join. If you're going to join, it's up to you. There's no pressure. You better be on the chat. I wouldn't say there were big swings this month. We had a big swing to the downside to start the month, and then it's been incremental, you know, digging out of that. So I need 2 really good days. I need 2 5-figure days to get me green on the month. Now, based on the market that we're in, I don't expect that to happen. If I can get $2,500, $3,000 on both of those days, I'll be happy, because there's no trading on Monday. There's no stream on Monday. There's no trading on Monday. It's Memorial Day, so and it's American holiday, so there's no trading on Monday. Just so you know beforehand. Let's go back to the 1 minute. This has got to be the least active I've been trading on one of these streams whilst streaming. Yeah, I feel like I've not stopped talking. I've not even talked about the actual action. AMC is looking quite good right now. Look at it on the 5-minute chart, 15-minute chart. Okay. But that initial move up, but yeah, it's not looking too bad actually. Below the VWAP. If it gets above the VWAP, we might get another run tomorrow. Where's GME? Because they tend to trade in unison. That's below the VWAP as well. So it'd be nice to see both of those above the VWAP. Head box. Well, that's sold off. That's squeezed done. Let's have a look. What's the biggest mover on the day? APYX. It's still moving up. I could have just stayed in that. When I entered here, I could have just stayed in it. In hindsight. Might have got stopped out here, but probably not. It's just moved up. Continue to move up. Granted, the range has not been huge since this first pop up, but we managed to trade it well. Size spark. That initial pop pre-market, and it's just been consolidating sideways. So if this gets above the VWAP, maybe we might get a little bit of a run tomorrow, but not overly convinced. It's consolidated a bit too long for it to be a flag. Although if you go in a higher time frame, the 60-minute possible flag, I guess. I'm not feeling that. Not feeling that. Clutching at straws. Go absolutely, totally, 100%. Time zone alignment. Again, the thing is here, I have my mornings to myself. I get up when I want. If I've had a little bit to drink or I'm feeling a little bit worse for wear, I can have a lie in and not worry about it, and then just get ready for the markets, and away we go. What do I think about Elon's Twitter purchase? Well, my first question is, will it go through? I know it's all confirmed and ratified and ready, but it's still yet to go through. My second piece on that is, what changes will he make? I think one of the big things with Twitter that I didn't like, and certainly Elon didn't like, and I remember him tweeting about this as well, is that the previous board, I think the maximum shareholding that anyone on the board had was 2%. And when you've got your C-suite that aren't prepared to put money in, take money out of their own pocket to invest in the company, that alarm bells start ringing about the company. So the question there lies in, okay, well, if your company is so good, why are you not invested? You want me as a shareholder to invest more? You want me as a Joe Punter, Johnny Sixpack? You want me to invest in your company? Why, if you're not prepared to invest in it yourself? If you look at the C-suite, and it's always good when you're doing your due diligence for long-term investing, value investing, always look at the shareholding of the board. If the shareholding of the board isn't substantial, then don't invest in the company, because what that says is the company, the C-suite of the company don't even believe in the company. And that was a big thing about Twitter is, Elon Musk went in and I think he bought 9%, and he was the biggest shareholder. So by a long shot, he had more than 4 times the largest shareholding of the nearest biggest investor, which was one of the C-suite. So that was one of his big things. If you're not prepared to invest in your own company, why should I? That was the first thing. The second thing is, I know he's talked about it, the whole bots thing, robots on Twitter, same on TikTok, all, fake accounts and all that kind of stuff. Twitter have been lying to their sponsors for years. And what I mean by that is that they tell their sponsors they're getting X amount of reach, when a large percentage of that reach is bots and robots and there's the clause, robots and automated users. They're not going to buy anything from whatever the advertisers are selling. So Twitter's been lying to its sponsors for a long time over their advertising reach. Free speech is one of the big things that he's advocating for Twitter. So then it becomes back to, well, are you going to censor people on free speech or not? Are you going to censor people from speaking about shit they know nothing about? Are you going to censor people that are posting inflammatory tweets? Where do you draw the line? It becomes a big tangled web, and Twitter had that. They went through that whole fight a long time ago about, we don't want to censor people's right to free speech, but also we can't have people promoting terrorism or child porn or other nefarious practices just under the banner of free speech. So let's see what changes if he does. Yeah, exactly. You can't manage free speech. It's either free speech or it's not. You can have guidelines, and then it's not totally free speech. So you basically put out your guidelines. This is where Twitter is right now, Facebook, Insta, all the social media. Where they're trying to get to now is they have the guidelines and terms of service, and if you breach those guidelines, then you go on a timeout, or you end up getting suspended, or in TikTok's case, we don't like the look of you, bye. Yeah, there you go. I'm not going to talk. You're not allowed to talk about gardening. Why? Well, what about pruning weeds? Is that gardening? What about farming then? Is that gardening? And then you get all these grey areas, and policing those grey areas becomes a grey area in itself. So Well, thanks, guys. Got one more glass of wine out of that bottle, and it's 9 p.m. a little over 4 p.m. market time. So it's been a lovely chatting with you all today. And if you want to learn more about trading, no, I've still got probably one more small glass left. They do say never drink out of something, a body that's bigger than your face. And this is almost as big as my face is not small. Let's just say I'm 6'2" and a bit, nearly 300 pounds. So this is not a small glass. I've got one more glass left. I'll finish that after the stream. A mega pint, absolutely, Jack. I get that reference. Well, it's difficult though. But I mean, okay, let's take it to the extreme. Nefarious activities. Of course, you're getting criminal activities. You can say, okay, well, it's not criminal activities. Okay, well, then you get the grey areas in between. What's criminal and what's not criminal? You get this. What's that group? Those pedos that say they want recognised rights like the LGBT community and stuff. I'm 300 pounds Dublin, not 200 pounds. Well, actually, I've lost weight. I'm about 280 now, so I'm still 18 stone in English money. So I was 20. But yeah, you can't. It's difficult to police a topic, and you've got to set. That's why you've got to have guidelines, and you've got to be very stringent and authoritarian with your guidelines. Now, your guidelines can be lax, but you absolutely have to be stringent with them. Dead cat bounce on which stock, or was it on the market? I don't know, because if you look at the market, you're talking about the market. Let's look at the market right now. Let's just have a quick look at where we finished on the market. So I just want to give this a quick refresh and bring this across. So this is more for the TikTok stream than the YouTube, because so this is the wider market. Let me just move this across so you can see it. So this is the wider market. It's pretty much green across the board, which is great to see. The S&P500, the NICE, all of these. So I love looking at these market maps, green across the board. It's just very bullish mentality, and it puts me in a good mood for the next day. It makes me feel like, do you know what? I'm going to make money on the next day as well. Whether I do or not, that's all depends on what happens the next day. But I do like those market maps. Now, let's take a look at the SPY on the 15-minute chart right now. So this is what it looks like today from where we closed yesterday to the move up. So you might think this is a dead cat bounce. However, let's look at it on the daily. That's why you're looking at it. So we had a little bit of a bounce there, then we reached these lows. So there's an argument to say you've got a double bottom there on the daily. And what way do double bottoms break? They break upwards. Look at it on the 60-minute. You can zoom out. It's a bit more pronounced when you zoom out. So we've got inverse head and shoulders. If you look at the on the 60-minute, there's your shoulder, there's your head, there's your other shoulder, and we're breaking upwards. So based on the technical analysis on the daily, on the 60-minute, I'm actually quite bullish on where we're at right now. I think that we've a little way to go back upwards. We might retrace a little bit, but I think the worst is over for the time being. I think we could rally again tomorrow, maybe have a bit of a retracement on Monday, and a green week in terms of the market next week. That's what I'm hoping for. Not financial advice. It's not financial advice. Who knows what the market's going to do? This is the whole point, is that the markets can be irrational longer than I'm going to be able to stay solvent. Simple. But when we got down to here, kind of 380 territory on the SPY, which is representative of the S&P 500, the wider market, that was a little bit worrying. I thought if we continue to retrace, that's recession territory. That's clear recession territory. So to avoid the recession, we need to have a little period of rally. Don't mind the pullback now and again, but we need a period of rally. We need to get back up towards kind of 430, 450, and then we can be safe again. Solvent or sober? Who wants to be sober? I want to stay solvent. I'm not too bothered about staying sober, but solvent, absolutely. Anyway, I've overstayed my welcome, so thanks for joining. Thanks for sticking around, keeping me company in the evening, and I will chat with you all tomorrow. Back at it when the market opens, well, 90 minutes before the market opens, so 1 o'clock London or Dublin time, 8 o'clock market time. See you then, guys. Enjoy the rest of your evening.
I met my wife 10 years ago. I wasn't ready to pay tax, but I am now, so I'd like to vote Conservative so I can pay less home tax. I do tax at all. I think money that I've, it's mine.